Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. So in this video, we're just going to be breaking down a USDJPY scalping strategy that is designed to help you take advantage of quick market moves. All right, this strategy is perfect for traders who want to stay in the market for a short time and capture small profits with frequent trades. Okay, now scalping is a trading technique that involves entering and exiting the market quickly, often within minutes, right? So for this strategy, we are focusing on the USDJPY currency pair, that is the US dollar against the Japanese yen. So why USDJPY? Well, it is one of the most liquid pairs in the Forex market with tight spreads and high volatility. So it's perfect, for scalping. It presents perfect conditions for scalping. The goal of this strategy is to catch small price movements throughout the trading day. Scalpers typically use shorter time frames like the 5-minute chart or the 15-minute chart to pinpoint ideal entry and exit points. The key here is precision, all right, as we are targeting small moves, usually in the range of 5 to 10 pips. Okay, so now let us just dive into the actual setup. For this strategy, we rely on exponential moving averages. Okay, so we are going to be adding the 50 EMA and the 200 EMA to the chart. All right, we're going to be adding both the 50 EMA and the 200 EMA to the chart. Let me just increase the thickness of this. Set this to 50. All right, and I'm going to change this to 200. I'm going to change the color for easy identification, right? Increase the thickness as well. Okay, here we go. So basically, when the price is above the 50 EMA and the 200 EMA, we look for buying opportunities. Whenever price is above the 50 EMA and 200 EMA, we're going to be looking for buying opportunities. Then when the price is below the 50 EMA, we target selling opportunities. So this gives us a solid trend direction to follow. Now, once we identify the trend, we focus on finding support and resistance levels. These are areas where the price has bounced before, okay, and they offer great entry points. So basically, if the price approaches a support level in an uptrend, so if you have an uptrend and maybe price, approaches a support level, like what we can see happen here, you can see that price approached this particular, remember this was a resistance that turned into a support. Here again, had another resistance that turned into a support. So now, in this particular uptrend, you can see that price actually, okay, let me use this one. You can see this is a resistance that turned into a support. So price broke above this, but then it approached this and got rejected. So basically, when price approaches a support and you get a bullish confirmation, it's a sign to enter a buy trade. Here again, you can see the price came down, approached this support, and then it went back up, all right, and then got rejected around this resistance before a bearish reversal finally happened. Okay, so the key to this scalping strategy is timing your entries. We wait for the price to pull back to these levels and then look for confirmation of the move. This could be in the form of candlestick patterns such as engulfing candles, pin bars, or simple price rejection. Once we get that confirmation, we enter the trade. Okay, risk management is crucial when scalping, so we keep stop loss levels tight usually just below the support for buy trades and above the resistance for sell trades. So if you enter a buy trade, you can set your stop loss just below the previous support. So if you had entered a buy trade after this confirmation, we can actually use this level for our support, sorry, for our stop loss, and take profit can actually be around resistance zones. Okay, that's for a buy. Then for a sell, after we enter a sell trade, we can actually use resistance level above the nearest swing high. You can use your price being above the nearest swing high for stop loss, and then take profit can be around support zones. All right. So you can actually decide to use a fixed risk to reward ratio, and then you can also set a tight take profit target if you have a tight stop loss as well. Okay, maybe typically between 5 to 10 pips. So scalpers rarely let their trades run longer because the volatility can shift quickly, leading to unpredictable moves. All right. So if the price hits your target, great. If not, you need to be ready to exit when the market shows signs of reversing. All right. Now, when do you use this strategy? When do you use this strategy? The USDJPY scalping strategy works best during times of high volatility, such as during the London and the New York trading sessions. Okay, this is when the market has the most liquidity and price moves are more predictable. Okay, so you want to avoid scalping during low volatility periods as it increases the risk of being caught in choppy and directionless price action. For example, you can see how price is being choppy right now. So in this kind of situation, just stay out of the trade. Let the price have a very clear direction before you enter the market. Okay, price should actually be trending before you look for opportunities. Make sure that you're looking for opportunities in a trending market, all right, to increase your chances of success. Okay, so to summarize, this USDJPY scalping strategy is a powerful tool for catching small but consistent market moves. The key is using the right indicators, identifying key levels, and timing your entries and exits with precision. So if you enjoyed this video, be sure to like it and subscribe to the channel for more Forex trading strategies. Leave a comment below if you've tried scalping or if you want more tips on other pairs. Thank you for watching and I'll see you in the next video. Happy trading.